This is Insights to Impact, where smart business strategy turns into real financial and community impact. I'm Nikki Roser, CPA and First Bank President and CEO. In each episode, we unpack the decisions that grow companies, strengthen leaders, and fuel local economic growth. Welcome to this episode of Insights to Impact. Today we're talking about fast financing options. I have with me Matt Whetstone, our senior lender here at First Bank. Matt's got 18 plus years of banking experience, primarily in credit and lending. So today's conversation, we're going to talk about the reality that we're seeing in the market. When cash flow tightens, many businesses don't start with a conversation with their banker. They start with a quick solution. And so we're seeing people looking for fast financing, easy approval, and immediate access to capital. And that solves a short-term solution, but may create some long-term costs that people really don't realize. And so it's not always about the financing, but also about the right guidance. And so we wanted to dig into that topic today. And so thanks for joining me on the podcast, Matt. So let's kick this off with what you're seeing. Are you seeing more businesses turn to these types of options lately? And what do you think is driving this shift?
Yeah, so let's maybe start with a little bit about more talking about what we're talking about here. These are typically non-bank options that are out there for small businesses. Specifically, a lot of them fall under what's considered merchant cash advances, or MCAs. And so we'll use that term a lot. But this is a financing product where the business receives a lump sum of cash upfront in exchange for a fixed amount of its future sales or its future receivables. They're typically repaid through weekly or in some cases even daily deductions from the income they have coming in. And so some of these are tied through merchant processing or a point of sale system. Some of these are through direct lenders that have easy access online or through mobile apps. And others are more like almost like brokers who will take an opportunity and maybe send it out to multiple different non-traditional financing options. And it's not something that's necessarily new. I can remember, probably 15 years ago, working with a new client who was trying to get out of a bad situation they had from taking advantage of one of these programs that was out there. But it is something that we're seeing more prevalent within our client base. Yeah.
Okay. And why do you think some business owners turn to this? And I know we said, fast financing, easy approval, but why are they going there first instead of starting with a conversation with their banker?
I bet if you ask 10 different business owners who have done this, you'll get a variety of different answers. But as I've seen a little bit of an influx of this within our clients, I think some of it comes down to really a couple of different factors. The first being that I think some borrowers feel like a lot of times when they're looking for these options, they're in a little bit of a financial crunch, right? They're in a cash flow pinch. There's something maybe unexpected that's come up. There oftentimes, I think, is a concern that if they come to the bank with that, that's going to be viewed as a sign of weakness. And so what's the bank going to say? Is this going to limit my ability to borrow money in the future? And so there's just maybe a hesitancy there for them to reach out to us first. I think the other is, like you said, it's sometimes the path of least resistance. As much as we hate to say it, I think small business owners are getting flooded with these offers on a daily or weekly basis, and sometimes just having the ability to cross that off their list much faster than what they view the traditional bank option to look like is attractive in that moment in time.
So a couple of things that I want to touch on that you mentioned. Is there ever a time when financing like this might be good in the short term?
I'm not bold enough to say no, because I'm sure there are situations. If it is a truly short-term need that has a very high rate of return and a business owner has to act now, I'm sure there are scenarios where the economics on that work, but I think that still is probably an opportunity to sit down with your banker and have that conversation. And if you've got a good relationship with that banker, they shouldn't be afraid to tell you, hey, there may be options out there beyond what we can provide that are better for you. But if it's not the banker, talk to your accountant, talk to some other trusted advisor who can just be another set of eyes and kind of help you navigate through that option to determine if it is the right course or not.
Because one of the things that I think I heard you say that your banker, your trusted advisor, maybe that is your accountant, could help you identify are some of those long-term impacts that short term or that financing may have that you really don't realize. So, did you read the fine print? So, talk a little bit about what that may look like and what some of those things that they may not even realize they're getting into
Yeah.
when they get into this type of financing.
Yeah, so it's interesting. And honestly, I've learned a lot just kind of exploring this as we've seen our clients that have kind of stepped into some of these things. A few things to keep in mind is that these, like I said, these are traditionally non-banking services. And so with that, you don't see a lot of the things that you would expect to see from a traditional bank loan. It doesn't usually have an interest rate attached to it. It isn't considered a loan. It's a purchase of future receivables or future sales. And so they're often tied to a factor as opposed to an interest rate. And so it's different terminology. It's something that I think for a lot of small business owners is a little bit hard to understand or to compare with what traditional financing might be.
What are the biggest trade-offs or risks that may not be obvious up front in these types of financing arrangements, or in other words, what's in the fine print that they may have forgotten to look at?
Yeah. Sure, a lot of these deals, every deal's different probably. But I think generally speaking, one thing to keep in mind is, like we said, these are traditionally non-bank products. And so they're technically not considered a loan. There's no interest rate. There's no traditional monthly payment. A lot of the things that we're so accustomed to that go along with bank financing aren't in place with this. And so, for example, with these MCAs, the small business owner may receive $50,000 that's deposited into their account same day, next day, whatever the case may be. And in exchange for that, they are providing $65,000, let's say, of future revenue or of future sales that are deducted from their account either through a reduced deposit that comes in from their merchant processing company or a ACH that is automatically pulled out of their account. Like I said, we've seen these daily, we've seen these weekly. And so, when you try to translate that into what does that mean in terms of comparing it to a traditional bank loan, it obviously depends on the amount of time that it takes to repay it. But I mean, these are typically 40 to 60 to 80 or even over 100% interest rate equivalent of what you're paying on that money. And so it is fast access to it, but like we said, oftentimes this comes in a period where there may be a bit of a cash flow challenge. You're trying to navigate a cash flow issue. Well, now all of a sudden, if you signed up for a daily or weekly payment that's being pulled out, sometimes that can just snowball affect that issue. All the while you're paying the equivalent of an extremely high cost of money for that $50,000 that you borrowed.
So that really kind of hits on this next question. How can these types of financing decisions affect a business over time? And one of the things that I think about when a client has or a business has done that and they do have traditional bank financing, then it may be when they go back to their banker that this is something that, from what you're saying, they're pulling it straight from your cash flow. And so then that may be that snowball effect, your ability to pay your other traditional financing.
Or to obtain additional other financing. We've seen that where a situation where a client had done this. There sometimes can be a stacking effect to this, where there's a cash flow strain. A small business owner turns to one of these resources. That doesn't mean that the offers for more money don't come along, and so as they feel the pain of that, they may consider taking another one of these loans out. And so they kind of can stack on top of each other. And we had a situation where a client had done just that. And then when they approached us about some traditional bank financing, and we discovered all of this and looked at what the true cash flow of the business was with these payments factored in, it created a lot of challenges in trying to be able to get things done, and really pivoted the conversation with the client to, okay, how are we going to navigate through this? Because it really put them in a difficult position for us to be able not only to provide new money, but to be able to help them kind of try to get through some of the circumstances that they were in because of this capital they had taken.
And I think that speaks to this next question. How does involving your banker earlier change the outcome for a business? And so that sounds like that would have been a really good example.
It would have. This is all, I think, just such a reminder for bankers and for small businesses alike to be proactive. As a small business owner, you're not going to be able to anticipate every surprise, every unexpected challenge that comes your way. But being able to step back and try to look ahead, and position yourself to where you can absorb some of the challenges or some of the hurdles that unfortunately most business owners are sure to face. It's time well spent. It's worth the investment, so that when those situations arise, you're not caught in a situation where it feels like something like this is your only option. As a banker, it also is a reminder to me to be proactive, to be having these conversations with clients. As bankers, we should be going out and we should be asking these questions and having these conversations, not in the heat of the moment when a challenge is there and presents itself, but in advance of that, so that we can kind of have a better understanding of how each other's maybe going to react if and when those challenges arise.
And I think these options are in front of everyone,
Yeah.
just with, the onset of fintechs and, your providers like QuickBooks, I know, and some different ones that offer this on a recurring basis. And so I think something our viewers need to understand is that there are options for flexibility that they may not realize if they come to their banker and
Yeah.
talk through this.
Yeah, and I think those options are just going to increase. I think as an industry, and I think specifically as our organization, we're continually asking those questions of how can we better resource our clients, and have some of those things in place to come alongside them, and help smooth out some of those cash flow challenges that small business owners face.
One of the things we've talked about, that these options are everywhere. I know you had told me earlier about some statistics that you found
Yeah.
on. Could you share those with us again? I just found those quite staggering, actually.
Yeah, so this was in relation to non-bank lending, which MCAs would make up a large percentage of that. Since 2010, they've increased by over 400%, and that now we're at a point where annually originations of this type of money exceed over $20 billion a year.
Wow.
And so if you think about that and just the scale of that, and just the number of small businesses that are pursuing these avenues, those are some staggering numbers. And the trend hasn't, it's just continued to rise year after year. And so I don't think we'll see this going away. So we think about the world around us, and the instant access we have to so many things, just from a few clicks on our phone or computer, whatever the case may be. This is just another area where I think that trend is going to continue to be the case. And so as bankers, I think we need to be educating our clients on things like this, through these avenues, through conversations, but also drilling down one-on-one, and having those conversations to help clients understand the impact of it, when it might be a good fit to use, but when it's something that we also need to be very cautious with.
Yeah, and I think that's something that, to really focus on is how, as from a client's perspective, how do they think about these options that are out there, and they are everywhere. Coming and talking to the banker, your accountant first before you dive in, and it may very well be a good option for the client, but being out on the front side of it, because too, and we've already talked about this a little bit, but if you have other financing, this may affect your payment repayment ability for those loans, and so it could pose problems down the road. Another thought that I had was, we talk about, especially in our bank, having the operating accounts for the businesses. But how does maintaining your operating account where you're doing your primary lending at really help you as a client, not just from a banker's perspective, but from a client's perspective? Because I think we're talking about this, really holistic approach and just having the full picture to help the business in the future. So what would you say to that question?
Yeah, absolutely. I think sometimes banks get a bad rap for clients thinking, oh, they just want all my business, and that's true to a degree,
Mm-hmm.
but it's for a good reason. It's not just for the bank's benefit; it's for the client's benefit as well. You're right. That holistic approach, I think, is what we find is most beneficial for a variety of reasons. One of which is that we continue to see fraud being such a prevalent thing that is attacking small businesses in a variety of different ways. And I think what a lot of customers probably don't understand is that we don't only have a operations team in the background, but we've got software, we've got tools, we've got fraud prevention and monitoring things that are taking place behind the scenes, and it's kind of staggering to hear some of the numbers that we even hear internally about some of the things that they're catching, some of the things that they're preventing, where it could be a significant loss to a lot of small businesses. And so having all of that data available to feed into some of those things is a huge benefit for the customer, for the small business owner, to have some of those protections, and also for the bank as we look at making decisions on future lending needs, as we are able to analyze opportunities to maybe provide services, be it on the lending side or the deposit side, that could be incredibly beneficial to our clients. The more access we have to that information, it really is put to good use, and can identify a lot of ways that a small business owner might not even know they can take advantage of some of the things that we can provide.
Yeah, this is a great point. I think that visibility really helps us support the business, or helps them work through some of
Yeah.
the issues that they may be having. So I think that visibility is incredibly important. Let's switch gears a little bit. So if we have a business that is, feeling some financial pressure right now, what's the best first step that you would recommend to them?
So bankers get a bad rap for, I think, anytime a client calls, all we say is, well, send us the financials. We ask for all this information. And that certainly would probably be the case if that call comes into us. But that's really a factor of trying to just dig in and understand what's the root cause of the problem. Where is this a revenue issue? Is this an expense issue? Is this a timing issue? There's a variety of different factors that can lead to some of those challenges that business owners face. And so having the financial data to be able to sit down with a trusted advisor, the banker, the accountant, whoever that person is, I think is a really critical first step of that, because we can talk about the challenges and we can talk about the issues, but being able to, one, have quality financial information available to you, and two, being able to use that to share with whoever it is that you're having this conversation with, really is key in getting to the bottom of what is the cause, and then what's the best fit going forward to help improve the situation.
I think what I've heard you say, it kind of goes back full circle to the beginning of this, is, oftentimes they go these options rather than starting a conversation with their banker. And I think if you had a banker, accountant, whomever, just keep that constant conversation going, that communication flow.
Yeah.
And then we don't have these issues where we have to say, okay, send me your financials, because it's an ongoing relationship. And I do feel like we see that in our portfolio, where we've got those clients that are in constant communication, use this as a financial partnership. And so there are no surprises on either end, and we can really help them navigate because there are going to be, peaks and valleys in every business cycle. And so I think that's really important to point out.
Yeah.
So what's one thing that you want every business to understand before choosing fast financing?
I think just understanding what you're signing up for. As bankers, I think a lot of times we think that the banking needs of a small business should be the top priority for that business owner. When in reality, business owners are wearing a lot of different hats. They've got a lot of different things that they need to worry about. They oftentimes are trying to navigate a lot of issues in a wide variety of business matters, sometimes on their own or sometimes with a small group of people that are there to help them. And so I think sometimes that puts them in a position where it's like, man, I just need to get this solved, and this is a way to do it. But I think the takeaway I would just encourage business owners to think about is think about the banker as that partner. And if you don't have that type of relationship with your banker, find a banker that you can build that with. Because then when those challenges come, when those situations arise, you get to a point where hopefully in time there's trust there to where the solution isn't just how quick can I get the money, it's who can I lean on to help me navigate this. And that's, I think, the ideal relationship that we would be looking for.
Well, and I think that's important too, from a client's perspective or business owner's perspective, is if you don't have that partner,
Yeah.
find a partner
Yeah.
like that, because you made a really good point. Business owners do wear a lot of hats, and you need that trusted advisor, whether it's your banker, your accountant, a mentor, whomever it is. But from a banker's perspective, especially, I know you all see this because you've been in banking a long time. We've all been in banking a long time. And so we've seen a lot of these throughout
Yeah.
our career. And so make one phone call, and that helps you become more informed than you were when you started.
That's right.
Even if you're not going to come to the bank for financing, maybe we can steer you in a direction to at least pay attention to the fine print.
Yes.
Pay attention to what that interest, rate's going to be, because they may not have looked at those things. So,
Yeah.
all right, great. This has been valuable. Thank you for your
Thank you.
insight. A few things that I want to just kind of round out with. One takeaway, I think, when challenges arise, don't just find capital, but find that partner, to help you navigate through this. Start that conversation early. Stay informed. Be intentional about trying to collect information around what we're doing, and don't navigate this alone.
That's right. Yeah.
So, all right, great, Matt. Thank you. And thank you all for watching. And I hope these insights bring impact to you.